What's going on, everyone? This is Stephen Place, the lead strategist at Market Traders Daily, and Bitcoin is above 60K, going absolutely parabolic right now. And into that, you're going to continue to see more interest from retail investors and folks who don't have a whole lot of exposure to crypto, but now they do because of the new spot ETFs that are coming in. So this video, we're going to talk about how these spot ETFs work, how to actually trade these Bitcoin ETFs properly. Most people are going to screw this up, which is why I'm making this video, as well as some of the other liquidity dynamics that are strikingly obvious now that it's happening right now. So let's go ahead and switch over to some charts. And this is a bit of a messy chart, but this is a chart of BTC USD. Okay, and this one is on the the Bitstamp exchange, which we'll talk about exchanges in just a second. But what has happened recently, and it came with this news event right here. The SEC finally allowed Bitcoin spot ETFs. And that's a big deal because spot ETFs allow the ETF custodian to buy Bitcoin outright. There were already some crypto ETFs out there, but they were exposed to the Bitcoin futures market. And when you do exposure to the futures market, there's some funny things that happen with the futures roll curve that can allow some degradation of the ETF over time. The best example that we have of that is going to be something like VXX, which owns short-term volatility futures, but there is a tendency for those volatility futures to be in contango, which leads to a strong tendency for this just to go down. Okay, so you don't want those kinds of dynamics. You want to just have straight up spot. Let me give you an example of some of the recent ETFs that have come through. First up is Grayscale Bitcoin Trust, GBTC rather. And then you have some other very clever names of some other ETFs. DeFi is another one that is going parabolic as well. You've also got HODL, HODL, which is the Van Eck Bitcoin Trust. And then you've also got BRR, BRRR, which is a hilarious ticker for crypto as well. So it's nice to see that the memes and the jokes that have been around for a while are bleeding over into stock tickers. But it's definitely, it feels like a top when we're using the ticker BRR for an ETF. Nevertheless, like if you look at BRR, there's not a lot of volume. There's not a lot of liquidity in this ETF. The bid-ask spread is going to be a little bit wider. As the market matures, those spreads will tighten up as market makers make it more efficient. But for example, if you were to try and do some kind of analysis just off of this chart, you don't have a whole lot of data to work with. In fact, if you trade any of these spot ETFs, you should not even look at the chart of the ticker at all, basically. You should be looking at the underlying asset. A good example is something like USO, which is an oil ETF. And the structure is a little bit different now, but you don't want to be looking at USO on its own. You want to actually be looking at crude oil futures, and predicting the price movements of crude oil futures will give you a better edge than trying to look at the supply and demand dynamics of the ETF. Very similar with VXX, which we just talked about. A lot of people will try and do technical analysis or liquidity analysis on VXX in a vacuum. I don't think that's useful. I think you actually have to know what the front month and next month VIX futures are going to do, and you want to start plotting that. Okay, so you don't want to track the ETF in a vacuum. It's not going to give you as much signal compared to trading and analyzing the underlying asset. The problem with crypto markets is that they're decentralized. So if you go and you take a look at the spiders, we can just look at the SPY. And the SPY is an ETF, and it has exposure to the S&P 500. And there's a lot of different exchanges that trade the spiders, and you can actually see all those exchanges on level 2 charts. And all of that data is aggregated so you can actually look at volume. So our volume over on this right side, this blue highlighted area, this is called our trading roadmap. gives you an idea of where prices are likely to go, what prices are magnets, where we're going to see hard reversals and things like that. So because crypto markets are decentralized, you need to focus on the ones that have the most liquidity. And there's actually two markets that you should be looking at. So you can look at BTC USD, and this is inside of TradingView, and they actually show you all of the different exchanges that you can look at. Now, if anyone in TradingView is watching this right now, I would love a way to aggregate all of the trading and volume data into a single chart so I don't have to hop around. Okay, but if you look at something like Bitstamp, and that's the one I normally use, okay, and the liquidity profile on the right side can absolutely give you some very strong signals. In fact, when we talked about this last, we saw this big spike higher that circled. That was in response to the Spot ETF, and I made the call that it was a fade the news event, because if you looked at the liquidity profile right here, the sell-off that we saw in 2022, there were most likely going to be some bag holders into this high volume node. And so we saw a hard pull into that. We went to this prior volume node. It's kind of hard to see. I'm making a lot of lines, but about right here. And that was the low in Bitcoin basically for the year. And then it's a straight shot up. The market took a pause at another line that I drew several months ago that I completely forgot about. And now we're straight shot up. Okay, so this market is going parabolic. Hopefully I'll remember to speak on that in just a moment. But this is the liquidity you want to look at. Okay, again, technical analysis, and what we call technical analysis is simply liquidity analysis in a different term, right? Is liquidity going to be taken out of this market, forcing the price to go higher or lower? Is there a ton of liquidity somewhere that's going to cause the price to turn around? Every single technical analysis system attempts to do something along those lines, okay? So you have to be looking at BTC USD on some of the major exchanges. Now, because of how markets operate, these levels are going to be pretty consistent across different exchanges as well. So if you wanted to go look at Binance, right, you can see some of the key high volume nodes and low volume nodes and turning points that are shown in this chart over here on the right are going to be strikingly similar to some of the other exchanges. And there might be a little less liquidity and a little less volume on some others, but overall, I think it's pretty fair to say that those are all going to work, but you want to be focused on the most liquid exchanges if you're going to be doing this kind of an analysis. The other thing that you have to watch out for is you can't just look at crypto denominated in dollars. And I know this sounds so weird, especially if you're not, if you're newish to crypto and you want to get some action right here. But you also want to look at Bitcoin denominated in Tether. And so you can do BTC USDT, and Tether is basically, it's a stable coin that attempts its very best to track the price of the US dollar. That's one of the big ones. And then USDC is the other one. So we can look at BTC USDT, and that's going to have a very different liquidity profile compared to indexing it against just straight up USD. But there's going to be some other hidden signals in here simply because the crypto market is continuing to push away from fiat and more towards stable coins that are technically indexed in fiat, but the liquidity is slightly different. Okay. Now, there still are some very lovely trading opportunities in Bitcoin and Ethereum and other things like that. Right now, retail can get access to spot Bitcoin ETFs. There's probably going to be spot ETH ETFs coming soon. There's just too much demand, and the SEC is going to have to get out of the way on this one. But one of the reasons that we are seeing this kind of move higher has to do with the structure of these spot ETFs. Okay, so you have a spot ETF on this side, and you have retail investors who don't normally get access to crypto markets. that are buying into these spot ETFs. The ETF custodian then has to go to the crypto native markets and go buy crypto, and that causes the price to rise, which means that the underlying price of those spot ETFs start to go up as well. And then more investors are starting to get keen on this and saying, oh crap, I got to go buy crypto. So then they go buy more of those spot ETFs, and you get this momentum circle where the price causes more people to get in to the ETF, and structurally that liquidity gets injected back into the crypto native markets, and the liquidity is not necessarily the same there. So you can see a lot more jamming higher right there, which then drives that underlying price. We're seeing a very similar dynamic, by the way, if you look at something like the NASDAQ, where we've seen such a strong move in the NASDAQ that has been driven by, for example, the earnings report that we had in NVIDIA. And because NVIDIA is such a large market cap weighting relative to the NASDAQ, as NVIDIA rises, the ETF custodians and the queues have to go buy more NVIDIA to deal with the weighting. And so that's how you get these kinds of momentum runs. Is it sustainable? No. Does that mean it's the absolute top? No. It's just things are probably getting a little bit over their heels right now because it's just a little bit parabolic, and we are coming into some monster levels back from 2022. Okay. That's not a bearish signal. It's just saying there's most likely some bag holders, right, that are still holding at 60K, maybe just a little bit above it, or who are saying, oh, thank goodness I can finally get out. Or if crypto rolls over just a little bit, those bag holders at 60K will be like, I'm not falling for that again. I'm going to sell. And then they accelerate that selling. All right. So that's just something to keep an eye out on. All right. What we can do is look at the liquidity profile of this topping process, and we can kind of, figure out where the next liquidity zone is going to be. And that's going to be between 61,400, give or take. All right, so that's the next liquidity pocket. And you can see some price responses into that. So maybe, as we come into this level, we might see a nose over. But if the liquidity flood from these spot ETFs continues to push, then this liquidity structure doesn't matter as much anymore because it's shifting so much. And all of a sudden, what could happen is that we see some kind of a big push and then into a pullback that becomes support instead of resistance. So it's very path dependent. I'm not trying to be super bullish or super bearish. I'm just telling you what the liquidity is in this market and why you should not be trading the spot ETFs based off of the price action from the spot ETFs. You have to look at the price action of the decentralized exchanges and look at the liquidity there. So if all of this liquidity analysis is kind of new to you, we've got a free training for you that steps through it. We use it a lot in the stock market, and it works just as well in the crypto markets because liquidity is liquidity. So if you'd like to get access to that free training, there's going to be a link below this video that will take you to our trading roadmap presentation that shows you exactly how to do this, as well as lots of case studies to show you the power of our trading roadmap. Click the link below, and I'll see you on the other side. Take care.